Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Good morning, welcome to the technical analysis of the Forex market. We'll continue to talk about the currency of the Euro Union today, but the analysis will be not so interesting how it sometimes appears. Well, sometimes it happens such days when the price action is not very impressive. Well, still, I would like to discuss with you some interesting moments that is forming currently on the daily and lower time frames on the euro currency. So we will start from the daily chart. What we will see here that yesterday trend has turned to the bearish sign and market has hit our area that we have discussed yesterday. It's around weekly pivot point. Well, taking into consideration that the trend still turns bearish, we do not have any context for the entering on the long side from the one point of view. If you are, for example, use the daily trend as a context for the possible trades on the lower time frames. But still, look at the price action. Although market has turned trend to the bearish, price action doesn't totally confirm it. Okay, so market continuing to the upside and now it stands just at the tight range. Also, you can see how this area around the weekly pivot points, just a bit below it, is holding the market. Market just stands here. The yesterday's trading session was the inside day to the previous one, so you can see this strong upside hanging man pattern. Okay, next day was inside day. Currently there is another inside day is forming on the euro currency. Well, usually when the market is showing such price action as the forming of the inside days, usually it tells us that we should be ready for some explosive moves to one or another direction. So it could be as to the upside as to the downside. We don't know yet. So because we do not see any signs of some strong patterns on the intraday time frames, but this is the warning sign. That's the trending day could appear as sooner rather than later. Well, about the possible move to the upside, there are some moments that tells that this could happen because the previous high is very close. So market makers also see it, and they like to trigger the stops just above the previous highs. Also, they see this bearish divergence that I have told you about yesterday. See this, okay, 2 taps, and the MACD indicator 2 taps. So you can see the nice bearish divergence. Market makers also knows that public look at these patterns and trade these patterns. So this is the very obvious context for the possible entering on the short side. And I will not be surprised if market first will show some clearing the stops just above these highs and then turns to the downside, some kind of wash and rinse of the previous highs in this B point. So this could happen twofold. This could be just a butterfly. This is the left wing, okay, that we have discussed yesterday. This could be forming the right wing with the target 140.90, okay, or just a bit higher, 141.06. This target is 618 expansion from this ABC pattern. Also, as you remember, this is the same level, 141 roughly. This is the target of the possible 3 drive sale. First drive, second drive, third drive. After that, market can show some move to the downside. Well, and possibly this scenario could happen because this price action is not very impressive from the bearish point of view, because market shift to the bearish, it should accelerate to the downside. Well, personally, I think that we should not think about the possible enter on the short side until market will break out this trend line and will show some clear signs of move to the downside. It's possible acceleration to the downside. Okay, that's my point of view in the daily time frame. I beg your pardon. Now let's shift to the 4-hour chart. What we see here, first of all, this was our area of confidence support that we discussed yesterday, and I said that if market will hit it, you can try to enter on the long side of the market. So if you are in, so I think that you are now in small profit, but be careful because this pullback to the upside could be just the reinspection of this area. During the second possible touch, this will not be so strong. If market will break it to the downside, I think that you better out and move your stops to the break even currently if you have the position around 139.50, 139.75 area, somewhere around this area. Now you can see that 4-hour trend is bearish. What else interesting we see here? Well, if market will turn to the downside from this area, this could be the butterfly buy pattern. You look at this. It's left wing, okay, and it could be the right wing. The target of this butterfly to the downside will be 127 expansion stance around 138 precisely, and 1618 expansion is below these lows. Okay, so if it will happen, the market will take out these lows. Be careful. The scenario to the upside suggests that, look at this, this is also the abuse resistance, 139.84. Everyone see it. Okay, market hit it once, pull back. Second hit, pull back. If market will hit it for the third time, be prepared for the breakout, or if it will not happen, for example, market will hit after the third touch. Market very often shows shallow retracement to the downside. It will not be that so deep pullback. This could be third touch, then shallow pullback and breakout in accomplishment of this possible big butterfly that we have discussed on the daily time frame. So a couple of scenarios is possible. Be careful and watch for the possible scenarios, but I think that the situation is very tricky currently on the euro currency. It's better to wait some more clear signs of the possible development of situation. Well, personally, I prefer for the short entering, wait until market will break out this area of support and until it not move below the weekly pivot point and accelerates to the downside. This will be my possible prompt to me that possibly market will not intend to complete the butterfly sell pattern in the daily time frame. It will not show any Russian rinses and possibly it accelerates to the downside. Well, until it stands there and is forming the inside days just below the previous highs, I do not feel any confidence to entering on the short side, because the Russian rinse pattern accomplishment is very probable. My possible triggering for the entering on the long side of the market will be if market will reach these highs again and will show shallow retracement from it. Then possibly I will try to enter on the long side with the tight stop, because I do not want to risk much in this very choppy and sloppy environment on the euro currency during the global turmoil on the Middle East and in Japan. So that's my point of view. Be careful. Keep your risk reasonable and try to use only clear signals from the market.